Hi everyone, I am Avadhoot. Here, today's session, we are going to see final account of partnership form. In India, at the 12th standard, there is compulsory question on this topic. We are going to highlight on that topic itself only. Here, what we are going to see that is called agenda of this session. Here, agenda means we are going to consider, first of all, the introduction of the partnership firm. Next, later on, we are going to see what is the pro forma of a final account that we are going to prepare it. Next, we are going to consider what are the adjustments are there, because after the trial balance, adjustments were given and that we have to consider, and how to solve such type of the problems in the examination and to score out of marks. That is most important for us. Now, here in this case, the introduction part is there. Whenever we are going to start any business in India, there are 5 types of organizations are there. How many types? 5 types of mainly organizations are there. In that 5 types, first it comes sole trading concern. Second, it is their partnership firm. Next, it is their joint in the family business. Next, cooperative society. And last, joint stock company. But we are not going to consider in detail other factors, other organizations, but we are going to consider what is a partnership firm. But partnership is a vast. We will talk in detail whenever we were having a separate session on a partnership. But to solve the problem, we must know something about the partnership. In India, every partnership is formed, established, or started, we can say, under Indian Partnership Act 1932. As per requirement, the said act was amended. Whether the registration of a partnership is compulsory, the answer is no, it is not compulsory, except in case of Maharashtra. That is the state of Maharashtra, it is compulsory to register the partnership. According to the Partnership Act 1932, it is defined as partnership is the relation between persons who have agreed to share the profits of a business carried on by all or any one of them acting for all. Carried on by all or any one of them acting for all is the most important. Carried on by all means all the partners when they are going to do the business, that is called all the activities are binding upon them. Whereas suppose one partner is doing for the partnership, then whatever the act he had done, she had done will be applicable to other partners too. Here the persons who have entered into a partnership will be called as a partner individually. Collectively, they are known as a firm, and the name under which their business is carried on is called a firm name. Mainly, we can say there are 2 partnerships. Actually, there are so many types are there, but mainly we are going to consider that is partnership at will and particular partnership. What is second? Particular partnership. Now, what is the at will? At will means as per the willingness of all the partners, the partnership is going to be continued, is going to be exist. Whereas a particular partnership is a partnership which is formed for a particular purpose and not for continuation. After completing that work, the partnerships automatically close down. That is called particular. There are so many other partnerships are there that we'll see in the partnership session. Another important thing is here, that is the liability. Liability of the partners are jointly and severally. They are jointly liable for the any act. Whereas the minimum partners in a partnership is 2 and maximum nowadays after amendment it is maximum partners are 50. That is regarding the partnership is there. Now here, another important thing that we have to keep in mind, that is the partners who are established, they are doing the business and they are going to share the profits and losses of a partnership is called PSR, that is profit sharing ratio, which is there in the partnership deed. What do you mean by partnership deed? Deed means it is an agreement. When they are going to enter into a partnership, they are making an agreement for that. That is called as what? Partnership deed. If it is given in a partnership deed, that is, they are going to share, suppose there are 3 partners, they are going to share as 3 is to 2 is to 1. That may be there, or it may be 5 is to 3 is to 2. As per their agreement, they are going to share the profit sharing ratios. If suppose if it is silent, means your partnership deed is silent, then in that case the partners are going to share profits in their equally. That is called, whenever the partnership deed is silent, the profits of the partnership firm will be shared by the whom partners equally. That is to be kept in mind as per the Act. This is quite about the learn we have seen about the your partnership firm. Now, next part is about the pro forma of a partnership. Now, final account, whenever we are going to write, whenever we are going to consider final account, in that case, you'll have to keep in mind, that is, you'll have to prepare the pro forma. Pro forma, you'll have to take 2 pages that should be opposite to one each other, left hand page and right hand side page. Left hand side page, we were writing the trading and profit and loss account, and secondly here we are going to write right hand side page balance sheet. There are 2 methods are there for preparation. Also another way, you can prepare trading account separately, you can prepare profit and loss account separately. There may be a partner's capital account is also there, and lastly balance sheet is there. But most of the books, they are giving such type of the solution, and we are going to do by this way only. There are 2 ways are there, that is the fixed capital method and fluctuating capital method. Today we are considering the fluctuating capital method. By that way we are going to consider the pro forma. But in case of fixed capital method, there is current account is there. Then in that case, after preparing trading and profit and loss account, we'll have to open the current account separately, and the capital balance is directly to be taken to the balance sheet liability side. Now what is this trading account? What is the profit and loss account that we'll have to see? Left hand side page, you'll have to prepare the trading and profit and loss account for the year ending. Now here in this case, you'll have to always keep in mind that while writing, you have to write in the top, that is in the books of, that you have to write always here in the books of. Next, we'll have to write here debit left hand side and credit right hand side. DR stands for debit and CR stands for credit. Is it there? Trading and profit and loss account for the year ending, we'll have to write here the date, that is at the end of the year, that is 31st March, and we'll have to put the date. Writing date is necessary in this manner only. Don't write 31st March 2022. This is not allowed. Let write 31st March dash. Generally year ending is March and that's why we are going to do it. Financial year it is called. Calendar year is the 31st December, whereas the financial closes on 31st March. Next, what is a trading account? Trading account is nothing but factory account. We can say for our understanding purpose, it is a factory. Goods comes in, goods goes out. What are the expenditures we are incurred in the factory are to be debited to trading account, and whatever may be the purpose, I am repeating, whatever may be the purpose when the goods are going away from the business, that is to be credited. That we have to keep in mind. Now, while writing on the left hand side of the page in the books of dash firm's name, you have to put it, and then 1/4 of the part will be considered for trading account that I have shown here, and remaining 3/4 of the part will be kept for the profit and loss account, because we have written here trading and profit and loss account. The items which are there to the P&L, that is profit and loss account, were more than that of the trading account. That's why we have made the division in this manner. Left hand side, it is compulsory to write to, whereas the right hand side, you have to write by, which is most important. First, to opening stock. Here we'll have to write the figure, outer column. There are two columns, left hand side and right hand side also. Rupees 2 columns are there. First is called inner column and another is outer column. Here also inner column and then outer column. What is this inner column and outer column? Whenever the item is having any adjustment that to be kept inside, and after doing the adjustment, we'll have to take to the outer column final figure. And suppose any other item which is not having any adjustment, that is to be taken directly to the outer column. Opening stock, up to that your stage there is no adjustment, therefore it is to be taken directly to the outer column, that is opening stock. We are going to write here. After that, there is a purchases, two purchases. Two purchases that goes to the trading account debit side. You are written there, two purchases. That to be always to be taken to the inner column, because from that we are going to reduce what? Return outward. It is also called purchase return. That is to be written inner column and to be taken to the outer column. Purchases. Suppose return outward figure is not available in the problem, then directly have a dash here and then take the figure outer column. Next, there is wages. Two wages. Wages means what? There are two types of the people are there in the offices. There is the blue collar people and white collar people. The persons who are working on the machineries will be called as a blue collar people, and to them whatever we pay will be called as a wages, which is paid weekly, fortnightly or monthly, whatever they are. Whereas the white collar people, they were getting salary, and therefore they are working in the offices, they will get the salaries, and that goes to the profit and loss account. If in the trial balance it is given wages and salaries, then you have to take first covered is wages, you have to write to the trading account. And if suppose it is given salaries and wages, then that you have to put to where? Profit and loss account, because the first word is salary. Then power and fuel is there. Power and fuel that we have to put to the trading account, which is required to the factory, machineries and always it is there. Carriage inward. Now, while considering the carriage, you have to keep in mind only the carriage is given, you have to write to the trading account. Carriage inward is given, that is also to be taken to the trading account. And if suppose carriage outward is given, then that is to be taken to the profit and loss account. Now here, wages, suppose there is an adjustment to the wages, then you have to write the wages figure inner column. And then if suppose outstanding is there, we'll have to write here, add outstanding and put the figure inner column, and then making adjustment, write the figure to the outer column. That is called adjustment figures are there. Right hand side by cells, we'll have to keep it in the inner column, then less return inward. Whenever we are going to sell the goods due to some, not always for the defective one, but some one or the another reason that will be returned to us, that is our sales are going to be reduced, it is return inward or it is sales return to. After deducting this, you have to take the figure outer column. Here, suppose return inward or sales return is not there, write the figure in the inner column, have the dash for this figure and take the as it is to the outer column. And whatever the thing, whatever the may be the purpose, when the goods goes out from the business, you like to write here in this, in between sales and closing stock. Last one is closing stock. For this stage, there is no adjustment. For the closing stock, general 99.99%, and you have to take to the trading account credit side. Miss, what is the pro forma of the trading account? That is debit, credit. Debit side, you have to write to opening stock, then leave one line to purchases, less return outward, then to wages, leave one line to power and fuel, to carriage inward, then buy sales to the credit side, less return inward or sales return, leave space, and then buy closing stock. Generally to the trading account, credit side is more, you'll have to put the total of the trading account credit side, write it to here, trading account credit side total, and you'll have to reduce from this total the total of the debit side items. What are the figures you are written to the outer column of the debit side, that is to be deducted, and it is called gross profit. Gross profit is what? Excess of credit over debit of the trading account is what? Gross profit. It is sales, credit side is more and debit side is less. There is a gross profit. In case of opposite, it may be gross loss, but generally gross profit is there. This is about trading account. Is it okay? I think so that you followed this part. Next, we will go for the your profit and loss account. Now, what is the profit and loss account? It is the account of the office that we'll have to consider. Whatever the profit we have taken there, that is to be written to the credit side of the profit and loss account by gross profit. Gross profit to be taken to the outer column. Gross profit is to be taken to the outer column. Next, what are the expenditures are there, that is to be written to the profit and loss account debit side. Then we'll have to write one pro forma, that is two bad debts in trial balance. What do you mean by bad debts in trial balance? Bad debts, as a term you know it very well. This term is knowing to you very well, that is called as what? Bad debts, which is given in the trial balance, that is the irrecoverable debts. Bad debts means irrecoverable debts, that is called bad debts. What are the bad debt figure is there in the trial balance, that we have to put here. Then add bad debts in ADJ, that is the in ADJ means adjustment. Whatever the bad debts figures are given in the adjustments, that we have to take here. And RDD, it is also called as what? RBDD, means reserve for doubtful debts or reserve for bad and doubtful debts, that is to be taken here of the adjustments. We'll have to take the total of this less RDD in trial balance, that is RDD given in the trial balance, that is to be written here, and you have to take the figure outer column, that is called the net bad debts, total bad debts. Suppose in the problem the total of these three is less than that of this. Means we cannot reduce the less total from the bigger amount. Am I right? Therefore, whenever this figure is greater than this one, in other words, we cannot write anything to the outer column. Then in that case, we'll have to put here credit side and we'll have to write here. That is excess provision. That difference, whatever is there, that to be taken here and it is called excess provision. Then all the items, that is to salary, expenses of the office, to salary, to rent, to insurance, to rent, rates and taxes, all other depreciation, cash, non-cash expenditures of the business except from the factory are to be taken to trading account, sorry, profit and loss account, debit side, and income gains are to be credited to the, means your whatever the income is there, that is to be written to the profit and loss account credit side. By rent is there or any other item is there, by your what we can say discount is there, discount whatever we have earned it, am I right? By commission is there, that will be taken to the trading profit and loss account credit side. Office income to be taken to the profit and loss account credit side. Then we'll have to take the total of the credit side, put it to the debit side, and the debit expenditures are to be deducted from this total, that is called your net profit. Net profit is nothing but excess of credit over debit will be called as a net profit. Net profit is to be divided among the partners in their profit sharing ratio, PSR. I have told earlier, suppose there are two partners, suppose profit is we can say 50,000, then if equally they are partners, then have a 25,000 inner column and write to the outer column 50,000, that will be shown as it is. This is called the profit and loss account. We will move further to the balance sheet. Balance sheet is a what? It is a statement. Balance sheet is a what? It is a statement. It is not account. That's why it is written balance sheet as on. What we are writing? Balance sheet as on. You'll have to put the date, that is 31st March. Suppose 2022. Again, don't write here debit and credit because it is a statement, it is not account. Left side it is called capital and liability. Right side it is called assets and properties. Here again two columns are there, inner column and outer column, inner column and outer column. The things, the items which we are having the adjustments to be taken to the inner column and others to be taken to the outer column. Left hand side capital and liabilities. First we have to write the capital. Capital of, here it is given, you have to put the name of the partner. I have taken the two partners. Capital of whatever is there, that we have to write, figure. Next, add interest on capital, add net profit, that we have seen just now in the last 25,000 each. Suppose he is the partner A, you'll have to write here 25,000 and you have to take the total. From that, we'll have to reduce the drawings and take the figure to the outer column. Now, capital drawings you were knowing very well. If suppose the drawings is having adjustment, then we'll have to take the figure to the pre-inner column, do the whatever adjustments are there, and then take the figure to the inner column. And from the total capital less drawings, take the figure to the outer column. Same with the another partner, Mr. B. Capital of Mr. B, add interest on capital, add net profit, total, then less drawings and take the figure to the outer column. Am I right? Now liabilities are there. Liabilities means the payable. Concerned business is owing to somebody else, it is called liability. Bank loan is there, bank overdraft is there, bills payable is there, sundry creditors that we owe to somebody else. We bought the goods or furniture or anything from that particular person and on a credit, and we want to make the payment. Everything that comes under the which side? The left hand side, that is called liabilities and known as what? Payable. But don't write in this manner in the book in your exam. This is called payable. Whenever left side is payable, means right side is what? Receivable. Whatever you want to receive, that comes here to the receivable. Whatever you possesses, whatever you owns, that is your business, owns, possesses, holds, everything is your asset. Therefore, cash in hand is your asset. Cash at a bank, US bank, cash is called as what? Cash at bank, it is also your asset. Goodwill is an intangible asset. Then there are so many fixed assets, plant and machinery is there, furniture is there, land and building is there, all is to be taken here. Then we have to put the current assets. Last year we have seen what is the fixed asset, what is current asset, what is fictitious asset, types of the asset, etc. We have seen it. Then we have to put here closing stock. Then sundry debtors. Debtors means somebody owes to us. We have sold goods on a credit and we want to receive it, or that particular amount from that particular person. He is our debtor. That is called as what? Sundry debtors. Bills receivable or any prepaid which is paid in advance, that comes to the asset side, whereas outstanding that goes to your liability side, because it is payable, and it is prepaid which is receivable, that comes to the where asset side. Any pre-received is there, that goes to the liability, and pre-received, and whatever we want to receive means it is called receivable, that goes to the asset side. Then take the total of the asset side and then the total of the liability side. This both the total should match each other. It should be same one. Then only we can say our problem is valid. It is there. And if it is tied, you will get a good marks, you will get a full marks. This is called a pro forma of a final account of a partnership firm. Before starting problem, you first go to this your book and prepare this pro forma. And then you start with the problem. Please like, share and subscribe to my channel. Thanking you. All the best, everyone.